Hello, guys. Good to see all of you again on the lecture 3 for our financial PR class. Today we're going to be covering the topic of strategies and executions for investor relations. So, basically, what this means is just what exactly are the kind of strategies and what do they do for investor relations, and what kind of strategies do they implement whenever they do their work. Okay, so I'm going to be going through the lecture. Now, to begin with, I just want to let you guys know that basically what happened for this week's lecture is that there will be a lecture, and then I will do also upload some of the videos for all of you to take a look. There will be 3 videos that I've uploaded, so please take a look through them. Now, the lecture will be cut short because I believe that for the lecture there will be quite a few activities that you need to complete to show that you have attended the class. So, therefore, please complete the activities that will be given. That is mostly related to the videos that I will be putting out on your times. So, what you need to do is to watch this video, watch the other videos as well, and then once you're done with that, to answer the question which is in uh, the lecture in your times, so there will be questions based on the videos that you've watched. So you guys will need to just answer the questions, and from the questions that you have answered, therefore and also a Google spreadsheet that I will put up. That's how you will track your attendance. Okay. So what you have to do is, especially for attendance purposes, I'm going to put up a Google spreadsheet where you actually write your name, indication that you watched the video, and also to show that you have attended the class as well. So I look forward for that. Okay, so I'll be seeing you guys then. Now I'm gonna keep this video a little bit short because it's gonna bother you to see my face again and again, right? Which is why I'm putting up and supplementing with some other videos for this week. But I will be seeing you guys live this Thursday so that I can go into explanation, especially if there's any explanation that you guys want for lecture 3, right? Now, end of the day, okay. So we have talked about 2 classes right now on the matter of investor relations and what exactly do they do, right? Now, so financial communication or investor relation is a vital factor to maximize shareholder values. So, what is it that I'm talking about? If you look at the chart that I'm showing you guys here, right, there will be 3 overall corporate strategy that you can see on your screen right now. Okay, of which, of course, firstly is actually the asset strategy, and then you have the financial strategy, and then you have the communication strategy. Okay, now these 3 things sums up the overall corporate strategy. Now, usually, of course, when you talk about financial issues, all right, financially, what you always have issues with are things like not enough money, right? So low liquidity, that means you don't have enough cash going around, you don't have enough money, lack of capital. High gearing, that means spent a lot, and of course there's a problem with your structure as well. So those are some of the kind of things that could happen financially, and these are the responsibility of the finance people, where basically what they do is they come up with investment strategy, strategic partners, looking for a strategic partner, or getting debts and equity funding, that means getting ways to pay their debts, and of course to restructure their debt as well, right? Now, on the other hand, okay, when you talk about issues of asset strategy, that means you don't have enough asset in your company. So there's a lot of other issues such as profitability, small market cap, credibility of your management or corporate structure. That means how much do people trust your company in generally, and what are the kind of things that is superb, so to say, in your company, so those are what made up your asset, all right? And of course, there's a lot more actions that you can take, but we're not going to go deep into that. Now, where exactly do we come in is basically under communication strategy. I mean, that's the whole point why we, under the PR, we learn financial PR, okay? Because in a company, communication strategy is part of the corporate strategy, right? Now, what are some of those issues that usually you face if, let's say, when it comes to communication strategy? So, for example, communication wise, there's a lack of value story. That means you can't seem to show people how valuable your company is and what exactly that is so bad, special or something that is priceless about your company, so that could be one of the issue. You see, you may be worth 1 million ringgit, but are you showing to your investors that you are worth 1 million ringgit? How do you go about doing that? So if do you have enough story to show that, ineffective communication and untimely information, I think this is pretty obvious by itself, right? If you are an ineffective communicator, or that you do have untimely information, that means you don't pass communication or information on time, that could be an issue as well. Poor corporate disclosure, that means when times where it requires you to give information to your investors, you don't do that. And of course, no access to management. That means kind of like people, your investor always feel that your management is very unfriendly and it can't seem to be able to access your management, right? Now, among some of the things that an investor relation officer does in situation like this is obviously, first of all, to develop a value creation story. What does value creation story means? Well, end of the day, it basically just means that you try to create stories to show people how valuable your company is. All right. And of course, secondly, you must produce quality and consistent investor relations material, which is where the part of the website. It's very important that you constantly update your investors with good content, on the website. So it kind of like you update your investors with, oh, look, check this out. You are doing this project to boost your money. And this is what our companies are working on. This is how much value you are getting back. So you got to produce quality and consistent IR material. And thirdly, of course, you to target and communicate to the right investor. You got to get to the right investor, right? And of course, to monitor and respond to market feedback. So you kind of have to be always alert on what's going on among your investor. What is their main concern? What is their feedback at this moment? So you got to monitor them, and then you got to actively show your response towards them. So those are kind of things that every single day, the communication strategy that an investor relations officer always work with. All right. Yeah, I'm sorry for the phone ringing. Oh, and by the way, it's actually raining outside here in my house. So I believe that you guys could probably hear the rain. So yeah, I'm recording this at a time where it's raining, but I hope that doesn't affect the quality of the sound. Now let's just go back to there, and then yes. Now at the end of the day, of course, it's very important for us as an investor relation officer to disclose information to our shareholders. End of the day, our shareholder wants to know. I mean, it's all about knowing, right? Kind of like, okay, at least you let me know what are things that is happening, right? And that will, at the end of the day, create a choice for your investor. Why? Because your investor needs to hear and understand and believe in your story. You kind of have to have a story, and then let them know that, hey, look, we are a good choice. Okay, so you got to give them. Remember earlier what I said about a value creation story. Got to create a good story so that a story that is understandable and believable. Okay, and the investor relation is of course one way where you introduce your identity as a company. You show people what you are, how valuable you are, and these will get you noticed end of the day. And the job is obviously to create the investor confidence in your company and in your management. And obviously, the process of building a good reputation never ends. If an investor feel badly treated, they will sell, and it's harder to bring the share price up to maintain it in the first place. So it takes 20 years to build a reputation, 5 minutes to ruin it. If you think about that, you do things differently. That's a quote by Warren Buffett, and I'm sure you guys know him. He's basically a financial guru. So now, end of the day, this is something that every company works hard towards, to try to build a good reputation, and also to make sure that they maintain that reputation, most importantly, right? Because why? End of the day, a good reputation can actually be very important, uh, especially when you're hitting things like crisis. Okay, now, and of course, a good investor relations helps when you need to raise capital. Whenever your money is limited, how do you get people to invest more in your company? So that is needed to be done. And when fund is limited, And that's where investor relation officers are very important in their role, okay, to convince investor to invest even more money. And of course, investor relations could also help in crisis time, because you never know what's going to happen. Like Forrest Gump says, life is like a box of chocolate. You never know what you're going to get, right? So we never know what kind of chocolate you're going to get, right? Oh, this could be an example that is not very helpful, especially for those of you who are fasting to think about food at this moment. But yeah, this is just a quote from Forrest Gump. By the way, happy fasting to all of my Muslims students. I wish all of you to have a great fasting month. Even in the times of MCO, I hope that this will be a good time for you guys to reflect, a good time for you to get closer to God in that sense, and yeah, to be able to make it a good and meaningful fasting month for you guys. So all the best, yeah. Okay. Now let's move on. Um, well, what is investor relations at the end of the day? Now, if you look at the chart that is in front of you right now, basically in a company, these are what you call, the first thing first that you need to know is basically what you call the IR constituency. That means people that you deal with end of the day. Now, who exactly do you deal with end of the day is basically institutional investor. That means, for example, huge companies like insurance company or banks, right? Because insurance company or bankers, they are what you call institutional investor, where these are big companies that takes money from other people and they invest on behalf of other people. Like insurance company, when you buy insurance from say Prudential, Prudential will have your money, and with your money they invest into businesses, and when they gain they give you a little bit in return. So therefore these are what you call institutional investor. So imagine if Prudential buys the share of your company, so I'm sure they will buy in big bulk. So therefore those are one of the main people that investor relation officer usually work with. And of course, you work with private investors. I mentioned before, individuals who are of high net worth. That means they got a lot of money to begin with, right? So, a private investor, it could be anyone as long as they have money to invest into your company. And then thirdly, you have to deal with the analysts. Okay, the analysts, if you recall, I did mention this before as well, that the analysts are basically people who are like movie critics. Okay, they look into your company, they see what you're selling or buying, and then they determine how much your company is worth, and then they will advise other people whether they should buy or sell the share of your company. So therefore, you deal with them a lot, and of course, you deal with the media a lot, right? So those are the four groups of people that you kind of have to deal with, right? So yeah, I'm just gonna get this off just so yeah, it will distract you guys. Now, on the other hand, so what are some of the message that you bring up? Is all under investment message. Earlier, like what I told you guys, under corporate strategy, financial strategy, or the execution plan. So these are the investment message that you are trying to present to your investors. Okay. And among the material that is used, also previously mentioned in our class, presentations, newsletter, annual report, web page, and email alerts. These are some of the basic things that you use every single day to communicate to your investors, right? And every year, what investor relation officer always do, they always have a lot of all these meeting, analyst meeting, roadshow, company visit, sites visit, conference call, email responses. These are some of the activities and channels that they use, right? So end of the day, these are the parts of which we are involved in. Now, what is the purpose of all of this? Now, the purpose of all of this is basically to contribute to, first of all, your investor being happy, and of course, more money contributed into your company as well. And it will lead to basically the circle that you see on the left side of the screen: access to capital, strategic feedback, stock liquidity, and fair valuation. Which basically means you are helping your company to get more access to more money. You are getting your company fair valuation. That means people look at your company at a value that you want to be looked at, and with that You have more money to play around, that means you have more cash flow. So you have more stock liquidity. And then from there, you also get strategic feedback from the people who invest in your company. You report it back to your company, right? So you are the in between of your company and the investor. You juggle between the two parties, right? And of course, the many constituencies that I was just mentioning earlier. So basically, this is the IR flow in general in every company. All right. Now, I'm not going to bore you guys with a full detail of these, uh, all seven or eight, yeah, eight chart of the IR people. But basically, what you have to understand is that in every company, when it comes to investor relations, it is made up of these eight parts. How committed are your management to investor relations? And then, what are some of the objective and strategy that is being implemented? What's your brand? What's your message? What's your info? What's your material? And how do you choose to deliver your material? And of course, how good are your IR team at the end of the day? And are they intelligent enough? So if you look at this chart is to show you guys the flow of how it all works. But I'm going to talk a little bit further about this probably when we meet on Thursday. And of course, at the end of the day, the CEO is an extension of the brand to individual brand. Okay, what do I mean? Business to individual brand. What do I mean by that? CEOs are an extension on the business to individual brand. Basically, sorry, CEOs are very important because at the end of the day, they are the authors and the creator of the future story of the company, right? Because they, as a CEO, are ultimately responsible for the success or failure of strategy, or the gain or losses of the market position, or the strengthening or the weakening of the company. I mean, of course, end of the day, how well a company perform is very much dependent on the CEO, right? And the CEO is always the strongest advocates for the investor relations brand and message. Therefore, if you're an investor relation officer, you must work very closely to your CEO to know and understand what your CEO believes about your company, and then how exactly can you help him to bring across that message to the people who are investing in your company. And of course, on the side of the investor will obviously likes to listen to what your CEO has to say. At the end of the day, your CEO credibility is everything to your investor. The more they trust your CEO, the more credible your CEO is, the more likely your investor relations brand will be a positive one. So CEO is always an extension of that IR branding. Okay. Now, what are do's and don'ts for the CEO in investor relations? Okay. If you look into this, it's very simple. A CEO must be what you call an information sharer. That means they shouldn't be someone who keeps information to themselves. A CEO must be very future aware. What is it that they see in future for the company? I mean, obviously, investor will want to know what's your future plan before they invest into your company, right? Be competitors aware. Are you aware what your competitors are doing? Are you also aware of how your shareholders are feeling? So these are the four things that a CEO should be very aware of in terms of investor relations. Whereas they shouldn't be delegating the thinking that goes into preparation of crucial IR brand related materials. For example, CEO letters to shareholder or insight where the company is headed. These must be handled by the CEO themselves. They cannot say that, oh, I'm not a good writer, so I don't know. I'll just leave this to the investor relation officer to do. He can't do that. There are certain things that the CEO must do for himself because he himself will be the best person to understand how he wants to brand the investor relations material. Okay? And of course, as a CEO, you shouldn't overpromise. When you kind of make promises up to the sky, you tell your investor within 1 year, I'm going to do this, I'm going to do that. We're going to be expanding into this and that. If you go too much into it, once you overpromise, people will not believe in your credibility. Never be trying to be all things to all people. A CEO is not there to please everyone, so he has to be who he really is, the CEO, cannot try to be everything to everyone. And of course, he must be one person. See, again, future aware. He cannot be someone who focuses only on the short term, right? Now, so these are your investor relation constituency or your IR clients, the media, the retail investor, institutional investor, buy side analyst, sell side analyst, and also the salespeople. These are some of the constituencies that you have to deal with. I mean, the constituency just basically means the people that you deal with on a daily basis, which basically, if you remember our previous lecture, is very simple. The analysts, the media, and the investors themselves. These are the people that you deal with on a daily basis. Now, at the end of the day, it's just very important that you remain relevant and adequate for these people. Always shows that you are accurate, you are up to date with your information, and you make sure that you're consistent. So, being consistent, right? Investor relation officer needs to always be consistent in the information that they pass on. You can't be telling your investor one thing on one day and then tell them something else on another day, right? And of course, most importantly, you also need to make sure that whatever information that you give to them, it is very convenient, easily accessible, right? Timely manner. Oh, as an investor relation officer, this is one thing you really need to be careful of, where information must get to your investors on time. You know, make sure it's accessible, like I said, and of course, you must be fair towards all of your investors. You can't say because he invested a little bit lesser, therefore I'm not gonna care about what he or she thinks. It doesn't work that way. You gotta be fair to everyone. Based on what they invested in your company, and to make sure that you give fair treatment to each one of them. Now, so end of the day, these are kind of the things that you have to do in order to get your investment thesis story. Now, I just want to go back a little bit to the slide. If you look at it, right, um, in this what is investor relation officer, you will realize that one of the main thing that came about is your investment message, or what I would call your investment story. So, end of the day, if you're a good investor relation officer, you have a story that you would like to tell your investor. And if you're a good one, you make them believe in your story as well. So, end of the day, these are how you get your investment thesis or story. You determine your company's advantage by ascertaining what the management think. So it's very important for the investor relation officer to be part of meetings and so on. So you know what exactly is your top management thinking about. So you know what they think. You discuss with the department heads. You read what the management has to say, because all of these things is how you gauge and get an idea of what your management think the story should be. And on the other hand, you also want to determine what the analysts and investor think by doing market analysis, analyst report from the press. So you kind of, like I said again, you are the in-between person between your management and the investor. So you need to know both sides of the story. When you hear both sides of the story, then you make up your own mind on what is your company's advantage end of the day. And when you know the advantage, that's how you formulate the investment thesis or story. Basically, in your investment story, you tell about your strategy. How is it that your company plans to succeed? And how do you do things differently from the competitors? That sets you to be different from your competitors. What are your strengths, right? How are you planning to implement whatever strategy that you have? And make sure that you have data and evidences to support your investment story. That way, your investor will be more convinced because you have data to back it up, and not just some vague promise that you make without a data. You kind of like, oh, I promise we will make 1 million end of the year, but how? How do you go about it? If you have like, okay, basically by 30%, we will achieve 30% of this by the month of March, and then by the month of June, we will do this, and we will get the 50%. You got to lay down the data and evidences. and of course to position yourself to be ahead of your competitors in terms of market position. Investor can choose from so many companies to invest in. They have the money. So why should they choose you? So you gotta show them that you are better than your competitors. You gotta show them you know what you are doing, you know how to succeed, and you have the strength to do so, right? And these are the key IR materials, communication material between annual report, website, and presentation. I think, of course, annual report is the most credible one. Like I said, all information inside annual report must be accurate and it lasts the longest, which is about a year, right? Because every year, of course, you have to come up with new annual report. The website is another key IR communication material, but of course, it's the most cost effective, reaches the widest reach. It's always your website is always the first point of contact for anyone who's interested to invest in your company. And of course, you can always link your website to other forms of communication. So website is always like a vehicle for other communication. So kind of like from your website, they can get in to contact you through email. Or from your website, they can download your annual report and your presentation. So it's always a website is always a good deposit of all your information. And of course, presentations, live presentations, just like what I'm doing right now for you guys, is always very interactive, instant feedback, best source of non-financial information. So, kind of like if investors have any concern, especially those that has nothing to do with the financial information, they might want to talk to you. So it is, of course, best addressed during presentations. And that is a presentation is always a chance to showcase your management experience and credibility. Is when your CEO can show people how credible he is, can show people how awesome a person he is. So that's under presentation. And again, so these are some of the pitfall that an IR must avoid. A lack of story and structure, a very ineffective management communication, and of course, non-attractive and professional visuals. So these are some of the things that is a pitfall. Now, I want you guys to see, or if you can see on the top of um, your slides, right? Okay. Actually, these are basically an indication or the number when it comes to here. All right. So I'm actually looking at it one by one. So when it's number two is IR objective and strategies and so on. So each of it has to do with each of the whatever things that I put out here is kind of like an extension of that particular graph. I hope you guys get what I mean, right? Now, of course, at the end of the day, it shows this particular research, okay, that has been done by one of the company shows that one-on-one meeting with management is the most effective way to communicate to analysts, and the analyst presentation is also 90% effective in terms of that, right? And even for fund manager, those who are thinking of investing into a company on behalf of other people, one-on-one meeting with management proves to be the most important communication channel. And of course, yeah, IR intelligence. At the end of the day, it's very important to have feedback to encourage two-ways communication. So IR communication should always be a communication between the company and the investor, to know what they are thinking. And of course, your job is to report all feedbacks to the senior management so that in case there's anything that goes wrong, a corrective and actionable measure is taken and is being informed to the investor. So let's say your investor is not happy about something, you report it to your senior management. Your senior management do something to correct it, and then you let the investor know this is an action that we have taken to make sure that you're happy. All right? And these are some of the hard skills and soft skills of an IRO. So I just want you guys to take a look at that. Yeah. And see which one you have or don't have. Probably you can think about it and try to work on the skills that you do not have, right? I think these are all very important skills. So again, some of you might ask, so do I need to know about accountings and finance. Well, yes, of course, there are some of the knowledge that is needed, but not to the fullest. You know what I mean? You don't need to be an accountant. As long as you do have some basic knowledge of how it works and how share market works, you can be an IRO, right? These are some of the hard skills you need and soft skills you need. But I think the top three skills: credibility, articulate speaker, and being able to think strategically are the most important skills when you want to be an IRO. Okay. And yeah, so at the end of the day, these are some of the things that you need to understand why sometimes firms are being undervalued. That means kind of like people don't see you even though you are worth that much, but nobody saw you for your worth. Why? Because a company lacks a good future plan or a very unclear growth strategy, very limited communication strategy, insufficient communication channel, insufficient information provided. You will notice that strategy and communication is probably like the top leading cause why firms are undervalued compared to the fact that you actually have little money or that you're a small company. It's not that. End of the day, even if you're a small company, what people want to look at is your strategy and your communication. Are you able to do that? That's why we as a PR practitioner, that's why we as investor relation officer, we are that important. Now, and of course, these are some of the 4 steps approach to achieve the best practice IR. I'm not going to bore you guys, but yeah, in practice, if you look at the slide, you got to know how much your company is valued. From talking to your management, looking at the share price, understand the market perception, how market is looking at you by talking to analysts, by doing in-depth interview with people, and then create your story, know your story in and out, and then review your investor relations system. Are you putting out your material on time? Are you putting it out well? Is it transparent? Is it active? Is it quick? You got to review all of this, and by you constantly doing all of this, you achieve the best practice kind of investor relations. Now, this is just one of what I would call the example, a case study for me to just conclude this. Okay, now there is this company that's called Total, right? Total has existed like really long time ago. Now in 1999, what they did was they actually bought. That means acquire means to buy. They bought a Belgian group called Petrofina. Now, when they bought this company, they did not really share with their investor why they buy, and somehow the investor were not happy because they feel like this Petrofina doesn't contribute to the company's betterment. It's not making the company any better, or it's not consistent with the company's goal. And because they bought Petrofina, can you imagine that their share price fell by 22%? And in the same year, it's so sad for them that in the same year, they have an oil tanker, they are an oil company, they have an oil tanker and it sink. It caused extensive environmental damage. And the thing is, their IR was so slow to respond to their investor in this and so slow to communicate. And when that happened, it tarnished the company's image until today in their home market. And this is where they came from. Yeah? And not only that, that's 1999. In 2001, they had a plant that exploded in France. But this time, they are smarter after 2 years. The issue was addressed immediately with the presence of the chairman to show support and take responsibility. And in the end, their image was not negatively impacted. So you see, people learn from their mistake. Companies learn from their mistake. Until this, why you might say, why are we bringing up a case as 1999? That's like super old. But Total case was one of the most how will I say? Total case was one of the most classic case you can look into to see how a company respond to their investor. It's storming outside, okay? So guys, be safe at home. So yeah, the key takeaways of this is that at the end of the day, you must consistently communicate with your market. you must deliver very consistent message. Consistency, consistency, consistency. Very important. Being honest and be prepared to give people information fast enough in a timely manner. And to show accountability when something bad happens, you don't just push it away. No? So yeah, thank you so much. Those are just basically some of the slides that I have. Now, I just want to let you guys, in conclusion, right? I'm going to let you guys watch the video for the videos to finish this lecture. And then there will be some of the things that you need to, activities that you will need to complete. So please watch the other videos as well. Complete the activity and also please fill up the Google spreadsheet for your lecture attendance. Okay. So thank you very much, guys. I'll see you guys on Thursday for a live Zoom session. Okay. Our tutorial is going to be live this week. So I'll see you guys on Thursday at 8 a.m. as usual. Then probably from there we can discuss further about this. Okay. So see you guys. Bye.